So much. My camera, everything was trying to mess up with me. Let me see. Let's share the live stream. Let's get to at least 730 people. Let's get to at least 30 people so that we can go from there. Hmm? Yeah, you put this light from behind here. This light has to be that way. Let's share the live. Let's share the live. So we want to do a weekly breakdown. We are starting a little bit late today because I was trying to set up. Probably I wanted to use my desktop, not this laptop. I want to use my desktop so that we can look at past trades. That's my previous trade and the trade which we are currently on now. So the trade which we are currently on now, we have to close that trade at break even because the trade has actually break our key zone and gone up. So it's coming back to retest. So if we test to close at break even, which is going to end us with the day at break even. But there's no problem if we end the day at break even. If not, that volatility is down already. Probably we should have been looking at a buy for gold now since it has break and gone up. We expect to come back retest. Then we have a buy to the upside. I should have been illustrating all of this while we are on this session. But nevertheless, let me try to see if I can log in my trading view. Let me try to see if I can log in my trading view on my laptop. We are not late, we are not late, we are not late, we are not late. We are just getting started. We are just getting started. Firstly, login. Good day to you all. Please let's share the live stream. Let's share the live stream. Okay, perfect. I think we have the account right here. Okay. Don't you think you learn to use this YouTube settings when you are less busy so that you come online to have everything you control and people letting know? My opinion. Well, it's a good opinion, but if you look at this YouTube, you see that we have been doing YouTube live since last year to figure out the settings now. Whereas there are times the technician comes and you have unforeseen circumstances. If I knew that I was going to have these shows, or if I knew that I had to start figuring out the settings right now, I would not have said we should have it at 2:30. So it's not like I was trying to figure out YouTube settings or whatsoever. Because we have been having live sessions on YouTube, except you are probably new here. So right now I'm waiting for the numbers to go up. That's what I'm waiting for now. And this is the first day. So like I said, this is the first day, the start of Monday chart breakdowns. So normally there are a lot of mistakes we're going to make, and there are a lot of mistakes we're going to correct as we go ahead, right? Probably a lot of people are not here because I didn't even announce it. I just thought of it yesterday and applied today. So as time goes, we are going to correct a lot of mistakes. We have 35 people here. Let me see if I can inform the others on WhatsApp. Okay. There are two people here. I think we can go with the 32 while the others are joining. So what to expect from the chart breakdown, like I said, is just a chart breakdown of major currency pairs, right? And probably I'll be taking some of the pairs that you are going to be requesting, right? We give you a pairs, we analyze it together, chart breakdown. We look at the fundamental news events we have for the week on major currencies and question and answers. You have any question, any difficulty, you ask a question and we are going to answer. So we are going to be having in-depth technical and fundamental analysis of major and minor forex pairs, key market setups and potential opportunities for the week, live question and answers to address your forex related questions, right? Every Monday at exactly 1:30 p.m. So now I was asking a question. Will you choose 1:30 p.m. or maybe 7:30 p.m. in the evening? I'm going to do a poll in regards to that. But I think 1:30 p.m. during the day is better because there's volatility in the market. At least we can do some chart breakdowns. But still, I also feel like most people are busy during the day. So I'm going to allow that for the majority to win the vote, right? I'm going to do a poll and send to all the groups. I'm going to do a poll and send to all the groups so that we can figure that out. So one last thing. Starting the year, you need to have in mind that 2025 is going to be a great year. 2025, we are going to have a lot of movements in the market. 2025, 2026, 2027, 2028. We are going to have a lot of great moves in the market, a lot of opportunities in the market, right? So it's better for you to start putting things in order now. It's better for you to start learning now. Learn quickly, make mistakes quickly, learn from your mistakes quickly, give it your focus, right? Give it your focus. So first of all, I want us to look at goal. I actually gave a signal on goal, which I just said break even. And I'm going to go there and explain why we should close at break even, why we have to close at unstable. Oh shit. Okay, so I'm sharing my trading view right here. Hold on a second. I hope we can all see my trading view, right? So this is my trading view right here. Minimize my chart. Most of the times I'll trade gold or GBP USD. But I prefer gold. The reason why I prefer gold is because gold is very volatile. It gives you a lot of movement in one day, right? But it's also very risky and it does not wait for you as a beginner. So I don't recommend you start with gold. You probably be trading gold or minor coins pairs which you're going to be trading. So gold, how was our trades today on gold first of all before we look at the general trend of the market for this week? Gold today we had in the morning I had to sell a buy setup on gold. I had a buy setup on gold in the morning at around this zone right here. We had a sell setup, we had a sell setup on gold this morning, right? At around this zone right here. Now, reason why we later on close that particular trade at break even, was because we had some break to the upside, which was just fake breakouts. Right there. So we had a sell trade this morning. Those who are in my free channel and VIP, I sent a sell signal in the morning on gold, right? Gold break this structure, push to the downside, and I gave another sell signal not long ago around this zone, right? I gave a sell signal here. Gold came down. I think most people who were still in the sell trade took their take profits here, right? They took their take profits here. It consolidated, break and went down. When gold was consolidating at this point, most people were buying. I don't know why they were buying at this point, but you can clearly see that the market has break a major structure up here around the 15-minute time frame. Now, if you go to the 1 hour time frame, You're going to see that gold has actually break this trend line that it has been respecting for a very long time, right? Gold has break this trend line right here, break to the downside. So at this point, you should not be looking for buy opportunities on this particular trade. Right here, you should be looking for sell opportunities. If we were to look at the trend line trading strategy, we look at the trend line breakout trading strategy. When the trend line breaks and the 1 hour candlestick close below the trend line, what do? You could enter this trade, right? So once this trend line break, you see this 1 hour candle. The 1 hour candle actually closed below the trend line. When the 1 hour candle closes below the trend line, that's a confirmation to sell. But anyways, if you have missed this confirmation, this sell entry, which I know most people missed it, and probably they're waiting for a retest. If you're waiting for a retest of this trend line, right, it did not succeed to retest back to the break of structure, right? It did not succeed to break back to retest back, but we had a little pullback. If you go to the 15 minute, you're going to see that little pullback very well. Now that explains one thing to you. You cannot always rely on one time frame. We can always rely on a particular time frame. You always have to switch through your time frame to see what you cannot see on the right time frame. If you look at the 1 hour time frame clearly, if you go down to the 15 minute time frame, you see that the market actually came down here, consolidated. Consolidation meaning that it is actually acknowledging the fact that this is a point of interest, right? This is a point of interest. But consolidated at break to the downside, right? It consolidated, break to the downside, came back up, retested this zone. This was where we had our sell entry, right? This was where we had our sell entry. So I had a sell entry here, I sent that signal. Stop loss was above here, that's our stop loss right there. And our take profit was down here. The market came back the first time, some people took TP1. Some people took TP1 when the market came down here. And our TP, our target was right down here. But now look at what the market did here. That's why I always say for beginners, at times it's just better you avoid trading gold because gold can be crazy. Now, what happened here was that gold break back to the upside. And if gold is breaking back to the upside, if you want to switch, just so you see this trend line here clearly, if you want to switch to a 5 minute time frame, you're going to see that we have something there like this. You see that we have something here like this, right? Market came down, break this consolidation, which I'm going to draw right. Market actually break the key level, right? Now the market break this key level down. Now our sell was at this point. That sell was at this point. Now we are selling at this point for the market to respect this zone right here to push to the downside. Our take profit is above that zone right there. Our stop loss is above that zone right down here. So what happened? The market went up, break back the trend line to the upside. But now, one important aspect that you always have to wait for the 1 hour candlestick to close. And you always have to know the sessions and the volatility in the market. Right now, volatility is already dying down in the market. That's why I told you guys to close that trade at break even. Probably close at break even or even with little profit. Now, there's no volatility for the market to actually break this market to come to the downside or to actually break this consolidation right here to push to the upside. We're going to see how this market is going to consolidate here for the longest time. Yeah. So we have to know when volatility is coming in the market. There's different sessions. When volatility is coming in, when volatility is dying. If you have you can download trading apps. You can download trading apps, golden apps. Golden apps is going to give you that volatility period in the market. You're going to see how much is running in the market at that particular time, and you're going to see how the volatility in the market is dropping, right? So the reason why we close this trade, this sell trade, the reason why we close this sell trade at break even, break this trend line, gone up, And what we are expecting is that it's going to come back down, retest, then continue to the upside. That's why I was very certain that it's going to come down to break even. And that's why I gave you the instruction, when it comes down to break even, you close, right? Those who have 2 positions open, probably you have closed your first TP, your first take profit here. So closing the second position at break even is, you know, you are still up in profit. Those who maybe had just 1 position open, if you close at break even, you have not lost anything, you have not gained any profit. But what have you gained? Experience. If you actually pay attention, there are times when I give instruction close, you don't just go and close. For those who are following the signals, right? You don't just go and close. You analyze, why am I giving that instruction for you to close? Right? Why am I giving that instruction for you to close? You're going to see that this closing at this point was mainly because the trend line has been broken. When it comes to trend lines, when the trend line breaks, what happens? It can continue going up or it comes back to retest. Now, if this trend line break before New York session opening, it was very certain, or if this trend line break during New York session opening, it was very certain that it can continue going up without coming back to retest. Right? It was very certain that it can continue going up without coming back to retest. But because New York session has already entered, that volatility has already passed, right? It does not have that volatility, it does not have that strength, that liquidity to push the market up directly, immediately it breaks. So it must come back, retrace back to our entry, retest now our trend line, giving us now a new support here to then continue pushing to the upside. So at this point, what we are expecting USD to do, that is gold, sorry. What we're expecting gold to do is to push like this to the upside. You see that that's our expectation for gold. Because it has break this zone right here. But now, at this point, we are focused on entries. Do we have an entry? The market is already late. If we had actually had this session at 1:30 as planned, we would have entered this trade together, right? So that's why I prefer we have the session at 1:30 rather than the evening. But now, let me just explain, right? We cannot have an entry at this point, reason being that there's no volatility to push the market. Now, what I will do here is that, coming back to my 15-minute time frame where I usually get my entries, I will look for sell opportunities on gold. Where will I look for sell opportunities on gold? If gold breaks this level, I'll look for sell opportunities if gold breaks this level, right? So if gold is going to come down to break back this zone, then I'm going to look for sell opportunities for a right to the downside, for a continuous movement to the downside. It has already break this trend line here, which is first point, which shows that our trend is bearish. But for me to get a sell position, the market will have to break this zone for me to continue riding to the downside. For me to get a buy opportunity, I'll have to wait for 1 hour candle. I'll have to wait for the 1 hour candle. Let me zoom out my chart. I'll have to wait for this 1 hour candle right here. Good. I have to wait for this 1 hour candle to close bullish before I look for a buy position on this particular trade. And if I'm looking for a buy position on this particular trade, it's a short-term trade. Probably the market doesn't want to retrace to meet back this key zone, then it continues to the downside. And overall, I'll recommend you going with the overall trend of the market. So if you are going to be taking a buy trade at this point, then you know you are just scalping a retracement, right? You just want to scalp this retracement to the upside, then you get that push to the downside. As of now, if you look at even the 4 hours time frame, you see that gold is on a downtrend, right? Gold is on a downtrend. If you want to apply the knowledge from trend line trading, the trend line trading strategy as a whole, those who are attending the free sessions or the students that are here, if you want to look at the trend line trading strategy as a whole, you're going to see that our trend line has actually break 4 hours candle. Our trend line has break. This first breakout came back, retraced, allowing just a long wick here, which means that this trend line was still valid. At this point, our 4 hours candle has break and closed below the trend line. At this point, if we're looking at even just the 1 hour candlestick, 1 hour candlestick has break this trend line and closed below. Again. So when the trend line has break and the 1 hour candle has closed below, that trend line has finally break. So at this point now, we are using the trend line breakout trading strategy, right? We're going to be using the trend line breakout trading strategy to make some money at this point. So if you do not use the trend line breakout trading strategy, that's the immediate entry technique, you'll probably have to wait for the retracement. I'm sure these things are not strange, right? So we have the immediate breakout, which how many on that trend line? We look at the trend line trading strategy and strategy. The trend line breakout trading strategy, we look at the immediate breakout. I hope we still remember that. So at this point, we will either use the immediate breakout here or we wait for the retracement entry technique. For retracement entry technique, to wait for the market to come back up to this level, then we have to push to the downside. And you go down to get your entries on 15 minutes. Most of my entries are always on 15 minutes. Most of my entries are always on the 15-minute time frame, right? So those who are still in that gold sell trade, make sure you close. Those that trade are break even, no volatility. Now, when is the best time for you to analyze your chart and actually place your trade? New York session opening, London session. New York session opening is very volatile. Take note of that. London session opening, that's in the morning. In the morning, you get up on bed to analyze your trade, place your trade. All you have to do is just to monitor the trade and see how the trade goes. Like this goal we took in the morning, the sell goal we took in the morning. All you have to do was analyze, monitor, and see how the trade goes, right? We took this other trade. London session or New York session open. New York session open right from here. New York session open right from around here. But this day we were targeting New York, right? We're targeting New York session opening. So while we're targeting New York session opening, we want to get into the market at that point where there's volatility. Then the market, you don't want to get into the market and the market consolidating, right? Push you. That's why at times I can send the signal immediately within the next 30 it has hit 100%. That's because volatility in the market. I want us to look at the different pair. I want us to look at the different pair we know how to analyze. So let's analyze GBP USD. Let's analyze GBP USD. Let's analyze GBP USD. now let's say I want to analyze GBP USD. I've just opened my chart. I don't know what's happening in the market. I want to analyze my chart longly. Bro, I see some key levels on GBP USD, but I'll always do my top-down analysis first. That's the first thing I always do when I want to analyze my chart. I'll do my top-down analysis first. Doing top-down analysis here, I'm marking your key levels from the daily time frame down to the 15-minute time frame. You can see I already have these levels marked, and these levels have been marked for more than a year. I've marked these levels a long time ago. I don't remember the last time I came on GBP and I actually marked key levels. But all what I do is I simply just follow the key levels as the market is moving. I just follow the key levels as the market is moving. When the market reaches here, I already know that this is a key level I had marked long time ago, right? If I had marked this level long time ago and the market is coming back here, then therefore there is a point of interest. You look at this other key level up here. This is a key level I had marked long time ago. But you see that the market has come and respected this level, gone down, break this level, retested this level, and gone down. Same with this one up here. So first thing you do on your new chart that you mark your key levels, top-down analysis. Marking from the higher time frame down to the lower time frame. Looking for the most obvious levels. Technical analysis is simply what price has done in the past to predict what price will do in the future. If you look at my charts are very simple. At times, some people turn to think that maybe my strategy does not work because it's too simple. Some people turn to think like maybe support and resistance will not work. It will not work because it's too simple. Whereas what is simple and understandable is what works in the market. So now some people think that maybe trend line is too. Maybe you want me to come and be calling big names, come and call big terms. But at the end of the day, those things does not work. Just mark your analysis. Allow the chart. Come every day and look at your chart. See how the market is going to respect those key levels. Technical analysis is simply what price has done in the past to predict what price will do in the future. So the analysis to see support and resistance. These key levels on the chart. So the first thing first, being able to draw your key levels. I don't intend to start teaching you how to draw key levels or I'll start teaching you trend line. But I just want to analyze the chart and go through. So on the daily time frame, you see that my key levels have already been marked. On the 4 hours time frame, my key levels have already been marked. And I bet you these key levels, I don't remember the last time I drew these key levels. These key levels have been here since last year. But if you look at it keenly, you see that somehow the market still respect the key levels up to date. That's to tell you that price is simply predicting, price is simply respecting what price has done in the past. And that's the definition of pure price action. So on the 4 hours time frame now, no new level is out that I could say, let me draw. So I'll just simply go to the 2 hour time frame. 2 hour time frame. On the 2 hour time frame, you see that the levels are still aligning. There might be a little bit of but clearly after how many months? If the market is at this level now on the 2 hour time frame, what are you expecting? You're expecting the market to come up to what are you expecting? You're expecting the market to level is here, meaning that the market has been respecting this key level in the past. Why we have this key level mark here. So if the market has been respecting this key level in the past, then it respect this in the future. So at this point, the market is on our level down here. What are we expecting? We're expecting the market to come back to this other key level up here, then continue downward. Since the market is on a downtrend, I always like to trade with the trend. The market is on a downtrend. I want to look for sell opportunities more than buy opportunities. And just as I have drawn my trend line, if you look at it clearly, you see that if the market has to come back up here, okay, you're going to see that the market has to come back up here. It's going to come and respect that trend line. And also respect that key level that's there. Trend line will always move in and always be the same. Whether you're using which strategy or which strategy or which strategy. Now I've drawn that key level right there, right? I'm drawing this key level right here. Now drawing this key level right here. Pay attention to what I'm pay attention to what happens here. This is what the market is here. Here. The market left up here. Lift down. Now the market is going to respect this level. The market will be respecting this trend line and also respecting this resistance level. Can we see that? If I'm expecting the market to come back up here, we are on the 2-hour time frame on GBP USD. I'm expecting the market to come back up here, right? I'm expecting the market to come back up to this level. Then I'll have my entry at this point. Why? Because the market is on a down. Why don't I just buy? Because since I'm expecting that the market is going to come up here, why don't I just buy? Against the trend. And since the market is against the trend, you might not have the strength to come back right up to this level. You might just consolidate here, then continue that downtrend already. You don't need you up there. You get it? So at this point, buying here is the trend of the market is on the downtrend. So you want to look for sell opportunities when the market goes down. It comes back retest, you have a sell, it goes down, come back to retest, you have a sell, it goes down. You are trading with the trend, and once you are trading with the trend, it makes things a little bit easier for you than when you're trading against the trend. You get it? So on this point, directly when it come back, the market has come down, consolidated. Wait for the market to come back. And if you look at this particular consolidation very well, you see that it's consolidating mostly to the upside. So you're struggling to reach this major key trend line. When you reach that major key trend line, that particular trend line, they will get back to the upside. So now what do I do? I simply have to wait, patient. Now analyze GBP. Have I entered the trade yet? No. Did I already enter the trade? No. Basically, I'm waiting for the trade to come and give me the right setup, then I will enter. Is that clear? The app for different sessions. The app for different sessions is trading hours. Trading hours. I'm going to look at the next pair which I want to analyze. Euro USD. I want to analyze Euro USD. So for Euro USD, I'll simply go into my daily time frame. I like to start with the daily time frame. Why do I like to start with the daily time frame? I want to understand what the candlestick is doing for that day. Okay. Daily time frame, I see that Euro USD is overall a bearish trend. So having in mind that okay, bearish trend, okay, so buy opportunities over sell opportunities, sorry. Bearish trend, I'm looking for sell opportunities when I get to the lower time. You and arranging your psychology in order, putting your psychology in order, right? So at this point, Euro USD on downtrend on the daily time frame, and you have to draw a trend line, I'll see clearly that it is a down trend, right? Now I'll go to the 4 hours chart. The 4 hours chart, I want to mark my key levels. 4 hours time frame, and mark this level. Level here. And just saying, you have a key level at that point, right? You have to correct key levels. Key levels you have. I can't see your screen. Okay, hold on, let me try to share my screen.